Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Question for you: what is the market tone, and really how tired is this market? A lot of things that we're going to have to look at that has kind of put the ebb and flow that we've seen in this trade. As we do this program on a Wednesday, still waiting for the cash, which has kind of become the norm, but will it be steady at least? We'll get all those details as we welcome into the conversation Brad Kooima. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's just talk about the tone of this market. What are you feeling when you look at the way this trade has been as of late? I mean, we saw some good numbers coming out of the South, but waiting in the North.
Thanks for having me on, first of all. And it's an interesting lead in. Sometimes I wonder, I've done enough of these types of deals and I've done enough meetings that sometimes you wonder should you just sit down and say, what do you think about? What do you look at? What do you think is important to market? And I don't have an exclusivity on that at all, but I do think that there is, I gotta be careful how I say this, there is a certain feel to the market and there are times when I have no feeling. Okay. And I think an honest analyst would probably share that thought. And then there are other times where it seems like, hopefully all those years of experience and, been in the trenches and stuff like that, maybe you get some nuance of, the market, that saying I've used on your show before, when you whip the horse, he had better run. I get that a little bit of that vibe, pardon me, with the feeder cattle futures market. Corn's making new contract lows. Okay. We haven't been this low since the COVID year. And yet the feeder cattle are just kind of laying here at the same prices they were a week ago, a month ago, 3 months ago, all the way back into early spring, mid-April. Why aren't we getting a little more, punch out of this softer grain market? So I don't know. I don't want to overreact to that, of course, but that's certainly on the back of my mind. The other element, of course, that's always a trick with bull markets, Susan, is that you need to keep fuel in the fire, right? And so to me, we probably need to show that the cash is at least steady, be better yet for higher, but with a discounted structure like we are, probably at least steady would be good enough. And the fact that October cattle 3 days in a row went up to 189 and couldn't pull through it, that seems to be, that's where, okay, there wasn't enough energy in the tank. There wasn't enough courage on the part of the buyers to take it into new highs now. So if that doesn't work, I mean, traders are very pragmatic. If it doesn't work to buy it, they sell it. I know that sounds kind of oversimplified, but most of these traders don't know the difference between a heifer and a steer. So there's that.
So where are we at when it comes to the kill cuts, and how prominent is everything right now?
Draw a line. I don't know. I guess I'd probably pick I-80. Whatever you distinguish the North as, the North where the numbers are still tight and have been for a long time. We've talked about it over and over. Don't know where those placement numbers came from on the October, November report, but they're not here in the North. And so the kill cuts that's where we are across the North. And there's a couple of them. Dark Friday, there was one dark Monday. I can go list several of them that are taking a day off here and there. Floating holidays, whatever other. There's a few of those that they can do, and even with the union contract that most of them have. And that's what you do when they'll say their margins are bad. My heart pounds for them. Or that's what you do when there's not enough cattle to go around, right? Which is, I think, really what the situation is across the North. The South is still going great guns, but last week we saw that narrowing a little bit. It had been $10 or $12 difference between the North and the South, and now we got that down to about 8. And I'm not sure if we're not going to narrow that up again this week, maybe.
So how current is the South then with their numbers?
Currentness. So there's two things I watch in terms of currentness. And some of it's subjective, but you try to keep these things objective. One would be average weights. Okay. Average weights across the whole country are that's the girl in the room. They're higher than they should be. They're higher than one would have expected had they not, had they, if we were indeed as current as what it feels like it is. The weights last week were down week on week by 2 pounds. So now we're to the point where like 23 over a year ago after being consistently in the 30s over. So some of that might be the weather. The other thing that you watch that's objective is the grade. And the grade has stayed flat. if I saw a big uptick in choice and prime, I'd say, oh boy, we're getting more days, because as your listeners know, days is what creates great. If we were getting a big uptick in that, either in the South general specifically, or across the whole 5 area region generally, then I'd be a little more worried too. I still think it's a reflection of, we've had great conditions. The performance of the cattle have been good because of great weather. I don't think, seriously, somebody's going to fight the market at 198. These calves make a lot of money here. I know corn's cheap. I know replacement feeder cattle are high, but gosh, guys, stay current. That's the reason why we're this good. And, I'm telling myself that, it's not, it's the end of July. It's not like this is the heart of your, optimum marketplace, where you're going into April or whatever. So now let's stay current. And I think we can keep our leverage.
Well, you talk about keeping that currency with the market, and is there fears? We've known that there hasn't been the cattle. We talked about this in last week's episode. There isn't that cattle to continue to fill the pipeline in some areas. So does that become a market concern?
Well, someone's going to have to go without. Or pay more than they want to, right? I don't want to talk about plant closing, but that's a long-term concern, I think, of the industry, right? I don't see that happening today. To me, as I've said more than once, the tight numbers are still in front of us. First quarter of next year is where I still kind of hang my hat, as assuming that we get some heifer retention this fall. That should mean that there's less heifers in the mix. That should mean, yes, fed cattle slaughter when you're in the first quarter when they would be fat. So I don't know. I sometimes I struggle with this. What's too high? I watched lumber go up 4 times in value. I watched orange juice double in value. I watched cocoa triple in value. I saw corn go from $3 to $7.50. I don't think it's up to you or me, Susan, on what's too high. And the market will overdo it, just like it'll go too low, like it did in COVID, right? And then it'll hopefully go too high sometime too. So I don't know. In the here and now, I think the market's struggling a little bit because the Packer's trying to slow the kill down. He's going to try to gain some leverage back. We're at a big level. 198 for cash cattle up here last week is near historic highs. So let's stay current. I think there's still a chance that some seasonal weakness here, but hopefully it doesn't break a lot. And then we can come back here maybe at the end of the fourth quarter and beginning of the first quarter for something that's even more fun than we've had already.
Well, we start into a new month, and obviously the heat's going to stick around for a little bit, so that'll affect some weights, but just...
it's a good thing you mentioned that, because I wouldn't mind just spending a second on that. The new month, right? So that means it's the first Friday of the month is this Friday. So that's when options expire. First notice day is Monday. And then we start to talk about what the CME doesn't want to talk about very often, and that's convergence. So we should be getting a little closer now to, you can start delivery Monday is what I'm trying to say, which of course there won't, given the basis that we have. But we should start to see a little more convergence. Now the futures is going to converge with the lowest common denominator, the weakest link, which is the Southern cash. Last week it was 190. So you're sitting here, I'm looking at August cattle, 187.25. Still a little bit of a discount, still look a little undervalued. We do have a little ways to go here before we get to the end of August. But next time we do this, we'll be talking a little more about that convergence and the discount, I think, from futures to cash.
All right, sounds good. What's the best way for folks to get a hold of you, Brad?
The phone number is 712-722-0023 or kkvtrading.com.
Thanks so much. Brad Kooima joining us today. Just a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.